Welcome, everyone, to this episode of our podcast. Today, we're going to be talking to Steve from Avalara, and today's topic is taxation. So, Steve, why don't you give me a little bit of some background of yourself and what you do at Avalara?
Yeah, thanks, Tim. Thanks for including us, and thanks for everyone who is taking the time to listen to this. I'm Steve Lacoff, and I work with Avalara. For those who may not be familiar with the company and what we do, we are a SaaS and AI provider of compliance solutions for businesses across the globe. And so, what that means is, we provide solutions that help customers automate everything from tax calculations to returns processing to exemption management. Basically the whole landscape of indirect tax compliance. And so I've been with Avalara a little over 5 years, and I run a vertical business unit that's focused on the communications and media space within Avalara. And prior to Avalara, most of my career has actually been in the telecom and streaming media space. I've worked for Comcast, for Disney, and most of those roles have been focused on running business units and product strategy.
Awesome. So communications, this is an interesting one, right? Traditionally, people are very much saying, oh, well, that's, my AT&T, my Rogers, my pure telecommunications play. And, that's where my brain sits on that. But there's been kind of an evolution of what's contained in what are communication services. And, whether that's in, automated healthcare calls or other different things. I'm just curious on your thoughts on how you're seeing that definition of communications kind of expand.
Yeah. No, I mean, it's been fascinating to watch it play out over the last few years, right? And I think kind of, old legacy definitions of telecom, really just aren't applicable anymore. And I think, there are a number of trends. I think the overall, kind of guiding force here comes back to technology and how that's evolved, right? So traditionally, communication services meant you got a line into your home, you got a line into your place of business, and it was very much a facilities-driven business model, right? Now communication services, like most services that we purchase, certainly from a B2B perspective, have all moved to the cloud, right? And they're connectionless, and they're all API driven, right? And so what you're finding now is that it's very easy for companies to integrate really sophisticated telecommunication services, whether it's voice, whether it's video, whether it's an SMS capability, into traditional software and SaaS solutions, right? And so in terms of being able to look at a company and say, you are subject to communications tax, those lines have really blurred, right? And so what you've seen is communication services bleed into these traditional industries like SaaS and software and IoT, who historically have never been subject to communications tax, which, by the way, is a totally separate tax regime on top of sales and use, which is already really complex. And so you've seen it proliferate, all that tax complexity for communication services into all these adjacent industries, right? An example for us is we have a lot of companies that we support, and if I went to their website, I wouldn't conclude that they're a fit for our solutions, right? So an example of that would be, we've got a very large customer that provides AP and collection services for healthcare companies, right, for hospitals. And part of their offering incorporates, a teleservice associated with that, calling people to collect money, sending text messages to collect money. They charge for it. And that component of that invoice is going to be subject to communications taxes. And so, I mean, there are dozens of examples where these are companies that they're not a cable co, they're not a streaming media provider, they don't offer a voice service, but they're subject to communications taxes.
Yeah, and I think that's probably maybe a good follow-up question then is, at what point on a feature or a service that's being offered, does it then cross the line into saying, I'm going to be applicable for these regulatory requirements?
Yeah. And there is honestly not a clear-cut answer to that, right? There's a little bit of judgment involved in terms of how material is this to the service. One bright line involves, do you charge for it? Right? So is there a line item on an invoice that's tied to those services? Now, that said, and as you guys know at LogiSense, there's a lot of innovation happening with pricing models. Everything is a bundle right now, right? So even if it's not a discrete line item, but it's a core part of a service that you are selling and you are monetizing, it is highly, highly likely that it's going to be subject to communications taxes. And then you start getting into, okay, what are the de minimis thresholds for communication taxes in all the different states and all the local jurisdictions? Frequently, they're low, right? So a lot of customers we find get pulled into a trap of, well, yes, I mean, my product incorporates voice or video or some communication service, but it's only 1% of my revenue. I don't really need to be concerned about it. And that is typically a problem, right? So even if it is a small part of your overall revenue mix, jurisdictions don't care. They want to collect that tax.
Yeah. Well, I guess that brings you to, like, you as a company structuring your catalog and your service offering, then, like, you want to make sure that if it is bundled, you're not just having this one big unit that goes off to taxation. If it's 1% of that bundle's pricing, I want to have that as a distinct piece of that bundle that I'm taxing separately, specifically, right? So I'm not incurring full communications taxation on the whole thing, but actually proportionate value, right?
You are exactly right? And that's a big part of what our services provide. If you are offering a bundle and it's a mix of, say, hardware, software, and then a smaller mix of communication services, that's part of what we walk through and set up and configure, and it's what our logic is built on, is where you're going to market with one price, right? But you still have to do an allocation across those services. And so a lot of our customers will fall into the trap of, well, I market it for free. Well, nothing is free, right? I mean, if you can go to any cellular provider now, it's going to say free messaging, free long distance, free internet. It's not free. There's a price and there's an allocation of that price. And, really what you're doing is you're including this service up to a certain amount, right? And so, we've got logic that kind of powers and supports all that. Yeah.
Cool. And like you mentioned geography in there as well. So geography is a very interesting thing, right? For usual people, like, oh, well, I've got state tax, or I've got VAT tax, or I've got these things, thinking that from a general sales perspective, right? But when it comes to communications, especially in the United States, around county and jurisdiction and where it starts and where it ends, coming on and off the network, and all of these different kind of complexities. Maybe you can, without getting into the crazy detail, because it gets really bonkers, but give a little bit of insight on what those complexities are and why you guys are there to kind of take care of those type of regulatory things.
Yeah, I mean, that's the key driver. I mean, that's what drives kind of, massive complexity that's really centered in the US, right? And it gets back to the fact, very simple, the US is a republic, right? So there is not a national tax. We have states that have the authority to tax, and within states, we have counties that have the authority to tax, and we have cities that have the authority to tax. And so what that results in is literally just hundreds of thousands of tax jurisdictions, each with their own unique rules, rates, and taxability for all these services. Now, what I just described, that's sales and use, right? That's the traditional indirect tax that everyone is accustomed to paying if you're selling here in the US. With communications taxes, you have a totally separate regime of communications taxes that can apply in lieu of or on top of sales and use taxes. And all that does is just compound the complexity, right? And so what makes that really hard is that the jurisdictional boundaries in Tupelo, Mississippi for a city tax for sales and use can and likely are different for a city tax for an associated communications tax, right? And what makes it even harder is you have special jurisdictions that are set up in all the states for, library services or emergency services, and they're their own unique creation, right? So you can have one address that homes to two jurisdictions, two rates, two sets of rules. And you've got to, it is literally not feasible if you have any kind of footprint that you're selling across. Manual is not an option, right? It has to be automated. And then all that complexity compounds, right? So calculating the tax is just the first bit of this. You got to apply exemptions. Everywhere you collect a tax, you've got to file a unique form, right? And the logic around that form and the timing of that form and when you have to submit that, it's all unique. And so the complexity is just massive.
Yeah.
That's solving for.
Like you said, so you've got kind of three areas, right? You've got I need to calculate the tax based off of all of these different rules. Then, like you said, I've got, exemptions for a bazillion and a half different possible reasons that someone could be exempt in those different cases in each of those different areas. Yep. And like you said, you've got your filing and your regulatory filing stuff. So can you maybe talk a little bit about the difference of regular tax filing compared to the, communication style regulatory filing that's required?
Yeah. You can kind of talk about it, and that's a good way of putting it, right? There's like calculation and then exemptions, which is closely tied to that. And then what we refer to as compliance, which is basically, prepping, remitting, and paying for your returns, right? And so on the tax calculation side, sales and use is very complex because you have this whole array of jurisdictions and rates and rules. But generally speaking, most of those taxes are revenue based, right? They're a percentage of revenue, which is simple math, right? In communications, it varies. So some of the taxes are going to look like that, right? Where it's a percentage of your revenue. Some of it is going to be based on your gross receipts. So they don't even care how much of it was telecom revenue. They want to look at all your revenue. And then there's a whole family of what's in the voice realm, what's referred to as line-based taxes, right? So they want to tax based on how many lines you are selling. And getting back to what we said before, where now everything is virtualized, like what is a line, right? 20 years ago, it was very clean cut. I had a phone line, right? Now I can have a line into my business that's a virtual line and 10,000 phone numbers sitting behind it, right? And so you've got all this just innovation has outpaced regulation. And so the way services are delivered and used today don't mirror cleanly with a statute. And so there's that introduces just a whole set of complexity on the calculation side. So that's kind of piece number one. And then piece number two is applying exemptions, right? So there are a bunch of instances where you don't have to collect tax, right? If you are selling to a government agency, faith-based organization, they're exempt from tax. Or if they're a reseller, right? And there's probably 5 or 6 like big use cases like that. Well, because we're dealing with these two tax regimes, just because you have a form that you've collected from a customer that says I'm exempt from this tax, that may apply for sales and use, but in many instances it won't apply for the communications taxes. right? So for example, even if you're selling to a government, which is like the core case of like, you can't expect me to collect tax on that. That's not true for FUSF. That applies to everyone, right? And also frequently they're different forms, right? You have to have a unique form to be exempt from a communications tax separate from a sales and use tax. So now, you see this complexity just like cascading and building and building and building. And then the returns piece is one of the more challenging, one of the biggest areas that our customers struggle with, which is, it's hard enough to file across whatever it is, 15 states, 20 states, 50 states at all of these different jurisdictional levels, right? So city, county, state, special jurisdiction. But now you're doubling or tripling or quadrupling those up, right? When you start filing returns. And so just the sheer load of work associated with putting things in envelopes and just the mailing of it, right, is too much for most companies. So, a lot of jurisdictions you can submit online, some through an API, some are portal based, some are mailing, right? And what we provide is the scale and the automation to just handle all of that, right? Yeah. And now you've got all these vectors for audits, right? At the local level, at the city level, at the state. There's not one entity that you're trying to please. You're pleasing just tens of thousands of constituents.
Yeah. And kind of going along the lines on the compliance side, and you talked a little bit before about, hey, you got free messaging, free this, free that. But on the compliance side of things, when it comes down to invoicing your end customer and giving them right? Is there what is there around? Are there disclosure rules? Are there certain things that need to be adhered to in those worlds as well?
Yeah. And that's an area where we work together a lot, right? So, LogiSense is a fantastic billing system. You're generating those invoices. I'm glad you brought that up because that's a whole other set of unique rules that don't really exist on the sales and use side, right? The sales and use side, you're basically just displaying, here's your tax, right? Whereas with communications taxes, jurisdictions have transparency rules, right? Where you have to delineate what the tax was for. You got to use explicit literals to describe that tax. So this is all truth and billing rules that are associated with this, where you can't just take all these taxes and add them up and put them as one line item. Some you can on the comm side, but then some you have to break out. And so there are all of these kind of unique classifications around just the painstaking detail of what shows up on an invoice. And that's a vector, believe it or not, like that is a vector for audits, where there has just been a lot of focus on it. And it's an area also, this is another area that's overlooked is consumers in the US have been trained over decades to inspect their telecom invoice, right? And so when that is wrong and you're charging taxes incorrectly or you're not clear on your invoice, that now becomes a cost from a customer support perspective, which is not, that's generally not a key area that people think about in terms of efficiency when they're investing in like tax and invoicing solutions, but it's a big impact, right?
Yeah. And Nick, you made the comment earlier about regulation can't keep up to the innovation that's going on. And so, as we kind of look for the future of where we see this convergence of software and connectivity, digital services, all these things coming together, I just want to get your thoughts of where do you see this heading in the next few years? And what does that landscape look like?
Yeah. I think there are a couple of themes there, Tim. I think one, unfortunately, is more complexity. So, if you looked at a pie chart of the amount of tax that's collected for communication services. What you would see is a huge proportion of that is focused on services like traditional voice, right? Or traditional pay TV that are their revenue is diminishing year over year over year, right? They're getting eaten up. They're getting cannibalized, that's the word I'm looking for by VoIP services and streaming services, which historically have been very lightly taxed, right? From a pure math perspective, that's not really sustainable, right? There's no tax on internet today, right? And so I think eventually what we're going to see is a shift of moving from 1 or 2 services or 3 services that are heavily taxed, because you still need the infrastructure. There's still got to be investment by the government, and they're going to distribute that across more products, right? That's politically fraught, but it is they're slowly starting to become recognition around that. So that's kind of thing number one. And then the other piece, what we're actually starting to see more of, and this is where the jurisdictions have recognized that we've got this archaic statute. It just doesn't fit with the way that services are delivered today. And that's line-based services, right? So those are like the E911 charges that people see on their bill. There's something called telecom relay services, which are people who have hearing challenges. And there's been a number of states have started to shift that from making it less line-based, and they're trying to align it with the way that services are sold. So they're looking at things, like subscriber counts, right? Which, now that introduces a whole new area of complexity, because folks haven't been concerned with tracking their subscribers. They've tracked units of what they've sold. And so that's just a different level of having to capture data to drive taxation. So, the pace is glacial. But, another example of that where it has happened more rapidly is streaming, right? So it's been inevitable that streaming subscriber counts are going to take over traditional pay TV. They hit that cliff that threshold 3 years ago, right? And so now what you see is jurisdictions are starting to see the taxes contract for video, right? And they're now starting to take all those taxes that were extended on traditional kind of cable bundles or satellite-based TV and push those across streaming, any type of streaming, right? Not just lean back living room experiences, but fitness apps or faith-based apps, anything that is streaming where you're selling a subscription or paying for downloads. More states are starting to impose taxes. 4 years ago, there were no taxes. And now half the states charge sales and use, and you've got probably 12 or 13 states that have communications taxes on those services. So it's inevitable. The thing that's hard to judge is just the pace. But when it hits, it hits, and it generally hits a big footprint.
Well, and that's just it. At the end of the day, the last thing a government wants to see is diminishing tax revenue, right? That's its lifeblood. And you see it all over the place. Like even like locally here, there's questions like road taxes are part of your gas prices. Well, EVs aren't paying gas prices, so are they paying towards the road? And if that shifts, what taxes should be imposed to EVs? So it's that constant shift of I need to be able to maintain my tax revenue, so I'm going to move it to where the technology.
And where does it happen in the supply chain, and what's the easiest point in that supply chain to impose it and collect it and audit it, right? Yeah.
Okay, so let's Dave. So for some closing thoughts from yourself, for anybody that's kind of in that SaaS world and trying to understand whether or not they should be looking at that world of communications tax, maybe some final thoughts on things that some advice that you would give them.
Yeah, I mean, I would say, if you have an element of your service that is a communication service, right? Whether it is, data, voice, video, or messaging, right? Make the initial assumption that you got a communications tax obligation. You may not, right? Depending on how it's integrated. but you know, it's just the adage of being safe than sorry. And then I'd say, you know, the other element is, you know, we are typically involved when customers are doing some type of ERP overhaul, right? And, you know, what we frequently see is customers make decisions around back office systems and billing systems and invoicing systems that are not communications tax enabled, right? They're not capturing some of those core data elements that you need to drive communications tax. You don't need for any other tax. And so I'd say that should be kind of a key vector when you're making a decision around an ERP or billing platform. And then, you know, the third piece is tax teams are generally the last to know, right? They're the last to find out, hey, we're acquiring this company and it's now imposed all these tax changes. They're the last to know, like, oh, you know, our product roadmap incorporates tying voice into our CRM service, right? To the extent that, you know, there can be more collaboration, right? Where tax teams are actually involved in a lot of those upfront discussions, because the impacts can be pretty profound from a risk and also from a revenue perspective. You know, to pull tax and finance teams, which are typically at the, you know, the end of the train, to have a little more collaboration up front.
Got it. Well, thank you so much, Steve. I mean, coming on here, sharing the insights and the expertise that you guys are dealing with day in and day out at Avalara. I really appreciate you for coming on to the podcast and sharing that with our audience.
Yeah, this was fun, and I hope it was helpful, and we appreciate being involved.
Fantastic. Thanks a lot.